So I now have the pleasure of getting to interview you guys and talk to both of you a little bit about your histories and your interests in terms of what's happening in the PropTech space right now. And we thought maybe it would be interesting for people who don't know to start off with just a quick kind of, how did you guys get into this world? Like, what's your background and your history?
I guess it's sort of, for me, it's a bit of a circular route. So I moved to the US for business school, and actually I spent a summer working at a venture capital firm, and they kind of said, Pete, find us stuff to invest in. And I was the summer intern, which is like absolutely the lowest level job in probably any company, but certainly any venture capital firm. And as it turned out, this was 2004, and they said, look at this real estate industry. There must be some stuff there. And I looked around for a while, and I essentially couldn't find anything, literally anything interesting. So I said, well, what company would I invest in? And that essentially became Trulia. I essentially wrote the business plan for Trulia, built off a thesis. I said, well, I should just do this. So I did that. So I basically kind of worked on it during my second year at business school, launched it, and then did that for 10 years. And it was at the time, I was kind of more interested in sort of solving the problems than necessarily kind of connecting capital and people and problems. But kind of 10 years after that, I said, well, maybe I'll go back to that kind of investing thing, which was quite interesting. And then and teamed up with a couple of friends and people I hugely respected to get NFX going, which has been going for about 2 to 3 years.
Awesome.
And I had worked in the Valley at E-Trade and Yahoo prior to joining Pete at Trulia, so probably 8 years or so working on consumer internet. Had gotten a little taste of real estate at Yahoo, where I was responsible for Yahoo Real Estate before the launch of Trulia and Zillow. Eventually was connected to Pete and joined Trulia as the COO about 5 years into Trulia's history, and stayed another 6 or 7 years from private to public to acquisition by Zillow. When Zillow bought us, Pete decided it was time to move on, and I carried the mantle forward for a couple of years. And then post that experience was really thinking about what I wanted to do next. Spent some time as an EIR at a couple of venture capital firms. Figured meeting entrepreneurs and drinking LaCroix was kind of the thing for me for the next leg of the journey. Lined up with Sapphire Ventures and joined them last year.
So
Where's your Patagonia?
I know.
I need it.
You guys have now been basically in every seat that you could have been, you, Pete in particular, around funding, right? So you've raised venture capital, you've taken a company public, you've then gone through an acquisition, and now you're an investor yourself. So can you talk us just through a little bit about those different steps in the chain and stuff you learned, reflections you have?
Yeah, I mean, there's like, it all looks kind of good on the outside, but kind of behind the scenes, like every entrepreneur, there's 1,000 no's, or at least kind of like 50 plus no's for every one yes. So yeah, it's really hard. I think just sort of quickly on just my experiences, like I found the kind of like the big mistakes I made early on is when we were getting Trulia going and trying to get seed funding. Was that we created the back end, which was actually really sort of quite hard to do, and then we had the ugly front end, and everyone said no, and then we just slapped on this front end, which we thought was the easy thing, and everyone said yes, this looks amazing. So it's sort of amazing how kind of like what you think is hard about a business is often different what investors need to see, and what they need to see was like we're confident we could see that someone could figure out the technical aspect. We're just not sure we could build a great consumer experience. And so just to be very empathetic around kind of what investors are looking for and the proof points they want to succeed.
Yeah, maybe related to that, I'll tell a story. So I joined Trulia in the beginning of 2011. This was post Series C, and I remember the press release when I joined was about Trulia building an IPO-ready management team. I was like, whew. Sounds awesome. And then 3 months later, we were going out to raise a growth round, and must have met with 24 of the fanciest investors around and didn't get a taker on the growth round. And I was like, what the heck just happened? I joined this company to be part of the IPO ready team, and investors, didn't love the space. There weren't, this was before people called it PropTech, and no one's built a big company in real estate tech, and the churn was too high, and the competitive situation was too crazy. We ended up not raising that round. We raised some venture debt, and 2 years later, had a successful IPO. So I remind myself of that now, sitting in the investor seat, of like, investors don't always have it right. Often there's a lot more nuance to the story than can be seen from the outside. But that was a sobering moment for me in the beginning.
Yeah.
I think, one specific to this audience, this conversation, the environment has changed kind of radically over the last decade. So, it's radical in terms of both the innovation, but also the capital inflows. And I think it's, what we've seen today over the last decade is like a number of very successful companies, multi-billion-dollar, certainly billion-dollar. I think if in real estate, there's been, I think, almost more billion-dollar companies than any other category created in the last decade or so, which is sort of staggering when you think about it. And that's, there's not been a $100 billion company, but there has been like multiple billion-dollar companies, which is certainly very attractive. I think you've seen entrepreneurs that said, well, this sort of light touch, social mobile communication, media type businesses of like, that's done. That's so competitive, it's almost impossible. They're going into these more regulated, more complex. You've got more experienced entrepreneurs going out for that. And then you've just seen this sort of influx of capital that's come in, which has come over the last decade, which is creating business model innovation, which is kind of aiding. That open door would just never be possible in 10 years ago. Certainly because there was sort of so much scar tissue from the financial collapse. But the sort of debt funding you're a tech guy that wants to raise it. They just could not compute 10 years ago. But now that has kind of fueled a whole bunch of additional innovation, which is kind of why we're here, I guess.
So it's, mentioning Eric and Open Door, one thing that I've noticed recently is that we're developing this little like a Trulia mafia of founders in the space. A notable number of founders in the space actually had exposure to Trulia in their earlier careers. Obviously, Eric, Sean Black.
Sean and Jamie.
Yeah.
From Knock.
From Knock. Andrew from Lyric.
Jonathan McNulty at House.
Yeah.
Yeah.
What is it that you think, there is no other, there isn't an equivalent group of people who worked at Zillow, for instance. Like, what do you think it was that was happening at Trulia that helped to foment this?
I think it's a couple of things. I think so. One is you often see that there are certain companies that create more entrepreneurial pockets than others. So one was that we, organizationally, it was certainly more autonomous and more decentralized than you typically see, where there were kind of units. We deliberately kind of like distributed innovation to the edges of the organization and pushed creativity to the edges. So it wasn't a sort of tops down. It's my idea. Obviously, I had the best ideas, but like, just kidding, seriously. But like pushing innovation to the edges, and you'd encourage people to like experiment, come up with ideas, execute those ideas. So pushing innovation to the edges was critical, and it was unlike you meet the sort of average PM at Google, they're like they can build amazing products, but they don't know how to drive distribution. Just being in a sort of relatively lightly funded company, we had to think about growth and distribution from the outset, which is just sort of fundamental to startup success. So, and then I think the sort of hiring bar, I think we just created a kind of hiring bar that created, and maybe last year, I think there's a little, I sort of think of it as, it's not identical, but with sort of PayPal, there was sort of like unfinished business. Getting acquired by your closest competitor makes you actually more hungry than it makes you lazy. And so I think there's a lot of people who are like, okay, like this was good. Now I'm going to like go and do something else and use what I've learned in another context. Do you have anything else, Paul?
No, I agree. I mean, I think culture is, I guess my takeaway just sort of for the general audience is just I think culture is everything in startups, and I think credit to you and Sami from the early days of just embedding culture and that hiring bar from day one. I joined, I think there were probably 100 or so people there, and it was just an amazing group of talent top to bottom. And I think, like, as founders, I think those first 20, 50, 100 people that you hire matter so much. Like, you really cannot change culture past, or in a meaningful way, past those first 50 or 100 hires. And I just feel like, Trulia had this amazing roster of smart, entrepreneurial, but really collaborative and sort of positive energy. And it was just palpable when you walked in the office. And I think that's a lot of what came from it as well.
So you now both are, actively investing, and you guys have very complementary investment focuses, right? NFX is focused earlier, primarily seed and A, and Sapphire is focused more on growth. So, you can give money to the next you in the round after someone like you was hired, Paul.
Yeah. The answer to that is yes.
Yeah. What is it that you're seeing that you're really interested in the space right now? Given your backgrounds in PropTech, I'm sure you guys both see a lot of stuff.
Yeah, maybe I'll go first on a couple. I think one of them is just there's still so much happening in residential real estate, right? If you think about the kind of evolution of residential real estate and technology, there was kind of first generation sites like Realtor.com that sort of got a little bit far, and that was the big gorilla that we were then trying to topple at Trulia and Zillow. And then you look at the last 10 years and the progress that Trulia, Zillow, Redfin, as now all sort of public companies, found a success. I mean, that really, to me, was kind of automating the front end of the process, making it easier for consumers to find listings and consumers to find agents. The transaction itself is like barely touched. And so the process of of financing, the process of closing and taking title, the process of moving in and home insurance. So I kind of feel like a lot of these ancillaries are one big theme area that I think is really, really exciting, and there's just a lot to do there. And to me, that's a 10x bigger opportunity than the opportunity that Trulia and Zillow and others sort of got so far. And then the other thing I'll mention is just housing affordability. I mean, you heard about it with Assemblymember Chu, and I think just across the board, there's just crazy housing inequality across the country. And so a lot of models that are really trying to make it easier for people to afford their first home, for people who have one home to then move to a second home and buy and sell in conjunction. I think all of those models to me are fascinating, and it's about time as well. So those are two themes that I'm sure you've got more as well.
Well, I think we probably have sort of three themes that we're focused on. So one is just the transaction, but I'd probably broaden it to beyond just the residential real estate transaction. It's also other transactions in the industry. So that could be commercial, it could be retail, it could be rental. It's like I still think it's the transaction is the where the opportunity is, and it's just so much harder, and it's not going to be a one size fits all. I think what the value proposition for Open Door is sort of specific for one type of segment, and you're going to see this stratification of segments, similarly in the other markets as well. So solving the transaction. Two is I call it broadly alt living, which may sort of tie into affordability, but it's again, you're just seeing, I know when I first rented in San Francisco, it's like, you're sort of a backward landlord and a kind of funny sort of property manager, and the whole thing was sort of incredibly backward. And then that's the same for most of the US. And so you see all these companies evolving right now, whether that's co-living or whether that's sort of more professional kind of like alternative living. I think the question that we ask ourselves within that is like, where's the tech and where's the margin? And I think that's, if there's great tech, great margin, and great network effects, then it's interesting. And then the last one is around sort of spend around the home. So this is, it can be from sort of innovative uses of AI and computer vision to solve construction or improve construction. I mean, you think about the expenditures. If you want to get a small renovation done in your house, it's incredibly expensive. Just you look around and see the cranes in the city, $1 trillion is spent on construction, and so that's that's yet to be touched by technology, and starting to see some interesting businesses in that area as well.
Are there specific trends around, commercial? So, for instance, construction versus small home renovations that you guys are interested in?
Well, I tell you one thing that we're perhaps challenging with is like trying to navigate CoStar. Quite honestly, it's like there's a lot of like, there's a sort of like elephant in the room, which is highly litigious, and it's like, and that's sort of that's fascinating to kind of figure out like that, $20 billion company I think is probably the largest, the most valuable. I can see Rich Boyle laughing in the corner. but it's, in that specific category, it's like, I think you do have to, I think that's, commercial specifically, like how do you navigate that company? And that, that's both a challenge and an opportunity for startups, because that they do have a kind of the tentacles in many parts of that industry.
Yeah, I would agree. I mean, I think commercial is a huge space. We're investors in Reonomy. Michael was on the stage earlier. And I think we are looking for additional plays in commercial. I think it is a challenge. We have had a challenge with adoption. So, a lot of the commercial real estate industry has not been the fastest space to adopt technology. So even if you build something amazing, that's step one. Step two is to actually drive the distribution and adoption. I think we're looking for that sort of 1-2 punch in big spaces like commercial.
Awesome. Let's talk a little bit about exits. We're, I would say, as an industry, moving closer to the point where we're going to start to have IPO activity. Obviously, we had a big IPO, activity earlier this fall. I'm not sure quite what to call that. But what do you guys think is going to happen in the space overall? Because one thing I observed with WeWork that I feel like we didn't talk enough about because of some of the governance issues that were a distraction is PropTech is a unique space where sometimes there's both real asset exposure and growth company exposure. How do you think this is going to play for the space overall in terms of IPO?
Yeah, I would jump in maybe first on just expand on what Pete said earlier, which is, I think the more companies have structural high margins and technology at the core and network effects and all those good things, the better they are, the more highly valued they are by public market investors, right? You sort of like go through this interesting arc where early stage investing, you're sort of just betting on the dream and the team and the promise. Growth stage investing, you're kind of investing on future growth. You're willing to be unprofitable in support of future growth. And then by the time companies get public, generally IPO, public market investors are looking for some sort of path to profitability. And so it's interesting to see, like Pete, you mentioned CoStar. So CoStar has a $20 billion market cap and is trading at something like 15 times revenue. We were investors in DocuSign, which is, I think, $12 billion market cap on less than $1 billion in revenue. So like at one edge of the extreme, you have companies that are essentially PropTech companies, software businesses that kind of serve the real estate ecosystem that are trading at super high multiples. At the opposite extreme, you have like traditional brokerages, CBRE or JLL or Remax or Realogy as public companies that are trading like less than 1 times revenue. And then kind of somewhere in between, you have businesses like Redfin. It's interesting, actually, Zillow was trading at a $10 billion market cap for $1 billion in pure kind of software internet revenue. And then since they've launched iBuyer, the revenue is actually up to $1.5 billion, and the market cap is down to like $7 billion. So somehow the market is like penalizing the iBuyer business. So that's a long-winded way of basically saying I think the market is just kind of showing this segmentation or separation of businesses that that public market investors love, which is high margin, mostly tech, network effects, increasing defensibility, and then at least for now seems to be punishing the kind of lower margin, more asset intensive models.
Mm-hmm. I think there's the other component is that public market investors and Wall Street loves predictability. They love predictability, to know that, okay, this month this is the March, and so CoStar, as a company, does extremely well. Whereas within the sort of traditional brokerage businesses, they are highly seasonal and highly cyclical. You could argue that something like Open Door is like even more cyclical than sort of traditional brokerage, because they're taking some element of risk. And so I think it will be challenging to what is, as you see these kind of many of these companies that have big balance sheet, they're taking debt, they're taking some degree of kind of housing market exposure, how they will kind of navigate the public markets. And so, I mean, there's going to be a challenging messaging story. That said, you look at, if you look down the sort of, if you ever go onto this thing called retailroadshow.com, you can see all these kind of companies, and there's, typically a few, one or two famous names. And then there's half a dozen biotech companies you've never heard of, and half a dozen REITs you've never heard of, that are sort of bringing in this capital. And so there is a significant appetite, but just at very different multiples in the public markets for these sort of assets.
Yeah, we had an interesting discussion on the phone about Open Door. Pete, you were expressing some skepticism about the way you think that the public markets might receive them, and Paul, you were expressing some enthusiasm. I'm curious if you'll bring that to the stage.
I think I think Eric said it on the stage earlier. It's like Amazon had similar degrees of skepticism for many years. You look at that, I think you go back into the sort of press back in 2002, or even earlier. It's like, .bomb, Amazon.bomb. I mean, it was the narrative that this is like, what are they doing? It's a tech company that's building warehouses. Mm-hmm. What on earth are they doing? All the sort of investor money went over to eBay. Obviously, kind of like, hindsight is 2020. Like, Amazon did the right thing by being incredibly customer-centric, even if there'd been like, negative margin or certainly zero margin for a while. So,
though, as you pointed out, AWS is a core part of what is allowing Amazon to perform today.
And it may be, and there may be a sort of profit machine in there. There may not be, but I think investors will be very skeptical, and I think there's, I think they will be skeptical and I think it's extremely hard to sort of, I remember sitting in analyst meetings and kind of saying, well, we're, trying to think through where the model is going to be in the next 1 to 2 years. Like, if you're Eric, like, good luck with that. Trying to figure out like what's your revenue going to be in 1 to 2 years. He's a brilliant guy, I think it's a great business. But I think it's just like, it's really hard to give some degree of guidance to public market investors.
Yeah, and I think I was more just mentioning that, as I said earlier, just iBuyer generally, Zillow added $500 million in iBuyer revenue and lost $3 billion in market cap for doing that. So that calculation to me seems off, and I think that's an overreaction. And I do think over time, someone mentioned this morning, I think Eric actually talked about kind of like employee rotation and even investor rotation. Yeah. Like, you have to believe in what the future is, and I think I think the iBuyer model will continue to scale. I think there are certainly questions about how meaningfully profitable it will be long term, but I kind of feel like there's no doubt that something that has that much consumer adoption and growth will be valuable businesses.
Great. Should we open it up to questions from the audience now? Anybody?
People are ready for a drink.
Yeah.
Uh-oh.
Where's the love? I hear a lot of times people say like the buy side is figured out, right? Do you think there's ever going to be another portal, another truly a Zillow? I mean, is that kind of donezo, do you think, or is there more room for that, or have they just been that dominant that you won't see anything else new?
So in residential real estate, I think it's, looking more so internationally, where the actually US was quite late to kind of adopt sort of the tradition, the sort of like high quality professional online real estate portal. It wasn't really until I would say kind of the 2005, 6, 7 that kind of happened that it was adopted. You look back in other markets and like they started earlier and they've maintained their market share, if not grown their market share. And so I think just the infrequent nature of the transaction, the network effect of that marketplace, I think once it's established, unless you're asleep at the wheel, I think it's very hard to kind of to do that again. Unless there's a new, unless there's a meaningful innovation, from a platform perspective, whether, the next mobile, but it feels like the management teams on the incumbents are so sophisticated that they'll figure out that new platform.
Yeah, I would agree. I mean, I feel like the core search experience to me is donezo in the US unless something significant changes. I think where you are seeing innovation is kind of how consumers and agents interact, smart access to homes, so you can kind of like see a home whenever you want to see it, little stuff around the edges, but I wouldn't expect, explosive innovation.
Can I jump in and say one thing here? I do think that regulation around the data is also going to impact that space potentially, and that just this past weekend we had NAR pass this coming soon, requiring all listings to go onto the MLS within 24 hours of being marketed anywhere else, because I think there's a push by a number of players in the space, most significantly Compass, to almost to recreate a walled garden, and the recreation of a walled garden would impact the front-end aggregator sites. So, and I expect you could see the DOJ then get involved in that as well. So outside forces may end up impacting some of these questions as well.
So you guys are both in venture firms where you're relatively the prop tech people, and there's a bunch of people that don't focus at all on real estate tech and their generalist firms, or generalist partners. I'm curious if you find yourself being the cheerleader or the evangelist for all things prop tech, and you're kind of pulling along some sort of reticent other folks who would just rather do consumer internet or enterprise, or whether you're actually, because you know so much about the category, you're the relative skeptic about various things, and in fact, the lack of industry expertise that the generalist partners have starts to introduce tension there. I wonder if you could just comment about the intra-firm dynamics.
I'll go. Yeah, so for sure I am the PropTech cheerleader inside the firm. I mean, I think there's just so much opportunity in the space in all of these different areas that we described. But certainly in our firm, where there's 7 US partners, we make decisions as a partnership, and so there is a process of sort of bringing your partners along. I will say a lot of our firm heritage really is software businesses, sort of high margin software at the core, with the idea being like when software is the core and tech is the core of what you're building, every year it gets better. It's sort of like improving returns to the investment you put in and so on. And so certainly the stuff that I think has found the most immediate and unanimous support inside Sapphire has been software businesses addressing the real estate vertical. And so just to pimp a portfolio company for a second, Side came through. I brought a lot of different prop tech businesses through that were kind of more high on prop, low on tech. And there were sort of questions on like, is this really a tech business? And does this, will we see the benefits that we know and love from software? And I think Guy and team did an amazing pitch, and just the business really is about technology that empowers the real estate vertical. And so I think for us, it's sort of like finding that common ground. And finding businesses that we believe have these kind of like long runway, high margin tech business embedded in real estate.
One more question, or no? Anybody else? Yeah.
Hi. So I've been seeing very little, investments or excitement around facilities management. That being said, there's companies like SMS Assist, that they're a billion-dollar company in the space over the past 5 years. CBRE has bought Facility Source, JLL bought Corrigo, and so on. So what are your thoughts in integrated facilities management and like the life cycle of a business in general in terms of investment thesis, or how's that playing out?
The sort of questions that one would ask is often around like what is the sales cycle within those sort of businesses, and what's the margin potential? And so it obviously depends on the type of business, but I think you've the fragmentation can be a benefit to many of these businesses, but it's also can be very painful. And I think as someone who is, once you look at the kind of like participants in the sort of ecosystem, sometimes within the real estate industry, like some of them don't have obvious incentives to be efficient. And some of them have incentives to kind of maintain the status quo. So trying to, just like any enterprise sale, it's like if you're selling a sort of IT services into a, if you're providing a service that might eliminate the role of a person, it's going to be quite challenging to get that through. So I think it's probably around sales psychology and getting the model right.
Great. Well, thank you guys so much, both for this panel and for organizing what is quickly evolving to be my favorite PropTech related event. So
Great.
thank you guys.
Thanks.